When Aussies think about going offshore, they usually picture places like Dubai or Singapore. But what if I told you that one of the most tax efficient, compliant, and respected jurisdictions in the world is right in the heart of Europe? That place is Ireland. Hi, I'm Virna White, CEO of WealthSafe, and today I want to share with you how one of my clients, Peter, and his wife, Sophie, used an Irish company to secure their wealth, expand internationally, and legally reduce their global tax bill, all while staying completely compliant with both Irish and Australian law. Peter and Sophie had recently gone through a major life transition. After selling their Australian property portfolio, they were sitting on several $1 million in cash, precious metals, and share investments. Their dream was to relocate to Europe permanently once their adult kids moved out of home. They wanted the freedom and opportunity to invest internationally without being dragged back into Australia's tax net. When we reviewed the situation, the opportunity was clear. An Irish limited company combined with Irish non-domicile tax residency. Together, those two structures created something powerful, a legitimate, transparent, European-based with near zero tax on foreign income. Here's why Ireland is one of the smartest offshore jurisdictions, especially for Aussies moving into Europe. 12.5% corporate tax on trading income, among the lowest in the EU. 0% tax on most foreign sourced income for non-domicile residents. No capital gains tax on qualifying foreign investments if managed outside of Ireland. Full access to the European banking and regulatory system. 100% foreign ownership and fast digital incorporation. And unlike traditional offshore locations, Ireland's reputation is impeccable, trusted by global giants like Google, Meta, and Apple. For Aussies, that credibility is gold. Here's how we structured it. Step one, we established an Irish private limited company, the entity that would hold their investments and manage their international income. Step two, we applied the Irish non-domicile tax regime, which allows foreign sourced income to remain untaxed in Ireland as long as it's not remitted locally. Step three, we set up a foreign bank account for their company, giving them global access without triggering Irish remittance. The result, Irish corporate credibility, a 0 to 12.5% effective tax rate on global income, and a clean, compliant residency position fully recognized by the ATO once their non-residency was established. At WealthSafe, every structure we build is legally watertight. For Ireland, that means meeting all ATO residency exit requirements, complying with Ireland's non-dom rules, and ensuring the company meets EU substance standards. Their setup wasn't about hiding money. It was about aligning their residency, company structure, and investments legally and intelligently. Within 6 months, Peter and Sophie had fully relocated to Ireland, bought their home big enough to have their family come and visit. The property was purchased under the Irish company for asset protection purposes. They opened accounts across Europe and began investing globally from the UK to the UAE, tax efficiently and compliantly. Their structure gave them what most people only dream about: complete wealth control, freedom with legitimacy. They weren't chasing loopholes. They were building a life full of adventures designed for global living, not just surviving Australia's tax net. As the world moves toward global tax transparency, Ireland's position is stronger than ever. It's OECD aligned, CRS compliant, and future-proof, which means your structure won't just work today, it will still hold up into the future. And for Aussies moving into Europe, Ireland is often the bridge between credibility and tax efficiency, a structure that gives you both protection and permanence. So if you're planning to move to Europe, or you simply want to hold your wealth in a compliant, low-tax jurisdiction, Ireland deserves your attention. At WealthSafe, we've helped Aussies like Sophie and Peter transition their residency, set up their Irish company and protect the global assets with 100% compliance. And always remember that Australia must always be the starting point of your global strategy. Your offshore entities should be built outward from Australia, not the other way around. Too many Aussies make the mistake of starting offshore, setting up companies or residencies first, then trying to work backwards into Australia. That approach is fraught with danger. Your offshore bridge must be built from Australia, then mapped out internationally, because all your legal, tax and compliance risk sits in Australia. If you get the sequence wrong, you risk triggering ATO scrutiny, residency issues, double taxation, or even worse, breaches of Australian tax law. That's why you must always start with Australia first, then build your offshore structure, your banking, business, investments, and residencies strategically, step by step in the right order. So everything aligns and stays 100% compliant. If you'd like to know how that could look for you, click below or visit wellsafe.com.au to book your offshore qualifying strategy session, because freedom doesn't come from avoiding the system. It comes from understanding and mastering it legally, intelligently, and globally. And if you want to see more videos like this, remember to subscribe and hit the bell, because every move you make now decides how free you'll be tomorrow.